Hey traders, Raghee here, and in this video we're going to review the day that was the non-farm payroll that was just a major disappointment for the market. You can see the way in which the euro has punched up to a new high. It's just on the doorstep of the 113 level, and I know a lot of traders are wondering, all right, Rag, is the move done? And I just cannot emphasize enough, not even close. One of the things that I wanted to see from the non-farm payroll report today, where I wanted to be opportunistic, I always like to have an offense. I always want to play offense. I don't like playing defense. Like I like to say in the chat room, I don't like dancing backwards in high heels. And even when the market is, quote unquote, moving against us, I still like to have offense. So what that means is, even when a market is not necessarily doing what I expect it to do, I will still scan the charts and look for something somewhere that might be leading to an opportunity for an entry or an opportunity to manage an existing open trade. So I want to bring up a few concepts in this video, and I'll follow up in the premium video with some of the details about how we're going to take advantage of ECB next week, as sort of non-farm payroll just didn't deliver what we hoped. What was I hoping for? I was looking for non-farm payroll to kind of pull an ADP for us. What does that mean? Let it print a big number, let the US dollar rally, and then let's sell the dollar into the rally. That is being opportunistic. That would have created a pullback in the Euro US. Now, the three currencies that I sent out in the pre-non-farm payroll email to members were the Euro US, the Euro Yen, and the Euro Aussie. 2 out of 3 of these we were what I call pre-positioned in. What that means is I'm not waiting for non-farm payroll to trigger my fill. I'm not going to make a bet on which way non-farm payroll goes. As of last week, Thursday and Friday, and then again Monday, we went ahead and put on positions in the Forex space that allowed us to take advantage of basically a 4-day window of opportunity where we could look for follow-through, and if we wanted to, we could get flat, what I call hitting the eject button, before non-farm payroll. These are all tactics that we like to utilize in front of a high impact event. And then on the event itself, we get opportunistic. We crunch the numbers, what I call the daily price movement range numbers that I teach you guys how to use in the chat room and in the members area of Simpler Futures, and actually Simpler Forex, which by the way are merging into one. So for those of you that are thinking to yourself, Rag, I've been curious maybe about currencies, but I don't trade them. Every one of these currency pairs is a tradable currency on the future side of things. So the cool thing about that is the spot players and also the futures players can execute trades on these ideas that I'm sharing with you. Now, did the dollar do what I wanted? No. We're going to have another shot next week, and that means the ECB is going to be basically my next big focus. It's going to basically be a non-farm payroll type impact for the US dollar and for the euro. So we've got the minimum bid rate decision, which I don't suspect there's going to be any change to the negative interest rates that we still have. But I think what we're going to see is maybe the press conference disappoint some euro buyers. Now, let's talk about the COT for a minute, because we're getting that right now. The COT shows the commitment of traders, which is a futures report put out by the CFTC, says that the euro longs are at 73,000 versus, I believe, 65,000 last week. So they've increased by, 8,000? This is the largest position for longs since, I think, this time of year, 2011. I want to say May or June of 2011. So a lot of traders will say, oh, this is a crowded trade. Gang, I know this might sound like heresy, but don't look for divergences. Don't look for the fact that this is too crowded to be a reason for traders to necessarily bail on the trade. And I think a lot of traders would find this a reason to say, well, let's sell the euro. In and of itself, the COT data is backwards looking and should only be used as a filter, as a secondary tool to determine, in this case, if indeed the euro is at a fatigue level. The fatigue level could trigger a correction. Then you add on more layers. Are we at a resistance level? Actually, we are. Are we leading up into an event just 4 sessions away that could be a major sell-off catalyst? There's very little I believe Mario Draghi could say or do on Thursday, other than hiking rates, which is not going to happen on Thursday anyway. There's very little he could say or do that would probably please buyers that have entered at 112 or above. If he doesn't mention taper in an emphatic way, the euro buyers will bail. It'll be a long squeeze, gang, and we want to. And by the way, if you're an SFXer, if you're a Simpler Forex or Simpler Futures member, you're not in from 112.81. You're in from 111.25. You're in from 108.55. You're in from levels of corrections. So all the shenanigans going on up here don't bother you one bit. In fact, we welcome a correction. Why? Because it'll allow us to get back in again. So, could Draghi disappoint? Yes. Is there an argument that maybe the COT is showing us a crowded trade? Sure, but don't believe in those kinds of assessments as standalone reasons to justify shorting this market. You're playing chicken with the train here, gang. I don't want you to do it. As we go through the next week, I'll show you some tactical things you can do to both aggressively and conservatively set up for a correction, maybe on the COT exhaustion level, and more importantly, set up for next Thursday's event. Now you might say, Rog, that's next Thursday? That's almost a week away. When you're trading daily time frames, you're not talking about multiple trades per day or even per week. You're talking about 5 or 6 key opportunities per month that you can get for some monster pips. Now realize, at 1281 here, gang, this is now a 400 pip winner for Euro US dollar from our 108.55 buy. For traders that entered at 111.25, again, another very nice 150 plus pip win. So I'm not looking for 30 and 40 pip wins here like I would look at on a 60-minute time frame or less. We're looking for monster pips when we're coming into a historically relevant cycle, one that we've already seen happen in the dollar, and it's about to happen throughout the remainder of the year and beyond in the euro, and we're just prepping. We're at the foothills of it now. I'll see you in the next update.